Next important unit from our exam perspective. Small unit. Quickly we'll finish these two units, which is average unit and account credit we're going to do now. I hope I'm audible. Yes. Good morning. Good morning. Again, another unit which is very important from the exam perspective can be asked, has been asked almost again every attempt for 5 marks. So I'll just do 2 to 3 problems. Very easy. This will not take much of our time. We'll quickly finish this off. If you have any doubts, you can ask me. Now, average due date, how does this work? What is the concept? So, what happens in businesses is you may have a lot of credit transactions. Let's say I'm a retailer. I purchase goods on credit and I sell it to my end customers. So whenever I'm purchasing the goods on credit, I will get credit periods from my supplier. That is to say that I don't have to make the payment immediately. I will get some time to make the payment. So my supplier will allow me, let's say, 1 month credit time. So it's like a loan. So I can pay after 1 month. So now the challenge here is that I might have a credit period of 1 month, and I might have purchased from one supplier multiple times during a particular period. So let's take for this example itself, or rather, I'll give you one example. Quickly, we'll discuss that, and we'll go for our questions. Now, let's say, for example, in the month of December, I have made purchases from my supplier multiple times. I purchased on, let's say, rate of purchases. Very simple. I'm going to try and cover everything possible here, even if you don't remember much or you haven't studied anything. Let's try and cover it comprehensively because it's possible. In a very short period of time, I can teach you in 15, 20 minutes, you will understand what we are doing. So please pay attention when I'm discussing this. So, date of purchases, you will have, let's say, we have purchased on 4th of December 23. We have purchased on 7th of December 23, 12th of December 23, 18th of December 23, and 23rd of December 23. And every time I purchased, I got a credit period. So the credit period was 1 month. For all of this, let's say 1 month credit period I got. 1 month, not 1 minute, 1 month. Okay, so 1 month credit period I got. And what will be the due dates for these transactions then? The due date for these transactions are, well, you just have to add one month to this. So I did not say bill of exchange. I said credit period. I said normal credit period, oral credit period. So just 1 month you have to add. No adding 3 days of grace. The 3 days of grace will come only if I say bill of exchange. If I say it's a bill of exchange, then we will have to add 3 days of grace because that concept of grace period comes as per the Negotiable Instrument Act, which is applicable only to negotiable instruments. It is not applicable to non-negotiable instruments. This is not a negotiable instrument. So for this, we don't add 3 days of grace. Only if it is a negotiable instrument, then we follow the concept of grace period. Now, this is not a negotiable instrument, it's oral. One thing after 1 month, I will make the payment, is what the deal is here. It's a orally, they have told. So you just have to add 1 month. So 4/12 plus 1 month is the 4th January. Just 1 month I have added to all of these transactions. I get these due dates. I hope everyone is clear with this. It's 24, sir, not 23. Okay, next year, no. So 24, 23, 1, 24. It's going to take some time for us to get used to it. Anyway. And then amounts. I did not tell you the amount of these purchases. The amount of the purchases is on 4/12 I had purchased for 10,000, 15,000, 17,000, 10,000, and 18,000. Now all we need is this much. We need the due dates and we need the amounts. Okay, we don't need all of this. This will be required only to calculate the due dates. Once you have found it, we need only this much. These two things we need. Now what we do is there's some steps we have to follow to calculate the average due date. Let's say we are going to calculate the average due date now. So we have to follow some steps. What are the steps to calculate the average due date? So average due date will be calculated. Before that, first we have to consider a base date. Now, what's a base date? Base date can be any date. Important true or false question, most likely to come for your exams as well. Sir, what is a base date? Base date can be any date, okay? Any date can be considered as the base date. But for our ease of calculations, what we do is in all our problems, we take the earliest date as the base date, earliest due date of all of these dates. What I've written first, no, not like that. Whatever comes first on the calendar. So in my calendar, you have a calendar, right? You're going to get 24 ka calendar now. So in the 2024 ka calendar, which date comes first? So that is known as the earliest date. I did not say the first date what I have written. I said earliest date, the date that comes earliest on the calendar. So that will be taken as the base date. Now in this case, 4/1 is the earliest due date. So I will take that as the base date. 4/1/24 is my base date. So we have to consider the base date. Then you have to take outstanding days. So what is outstanding days? It's actually intervening days between base date and due date. Okay, that's the concept. Intervening days between the base date and the due date. So what it means is from the base date, you have to calculate till the due date. From the base date to the due date. From the base date to the due date. So from 4/1 to 4/1. How many days? It's the same day. So 0 days. 4/1 to 7/1, 3 days. 4/1 to 12/1, 8 days. 4/1 to 18/1, 14 days. I'm just minusing 18 minus 4, 12 minus 4. I'm doing that. So 4/1 to 23/1, 19 days. Okay, then we have to calculate the product. Product is nothing but amount into outstanding days. 10,000 into 0 is 0. This is 15,000 into 3, it's 45,000. 17,000 into 8. $17,000 into 8 is how much? 1,36,000. This is 1,40,000. This is 18,000 into 19. 3,42,000. Then we total up the product. So you get 45,000 plus 1,36,000 plus 14 lakh. Sorry, not 14 lakh, 1,40,000 plus 3,42,000. What's the total? 6,63,000. This is the total of the product. Total of the amount also. So this is 70,000. Correct? No. Now we put the average due date formula. So the formula, the very important formula for average due date is base date plus or minus total product divided by total amount. So base date is 4/1/24 is the base date. 6,63,000 is the total product. 70,000 is the total amount. So what will be our average due date? The minus in the formula will never be used, okay? Because we take that base earliest date as the base date, right? Our answer can never be negative. You get 9.47, which is 9 days. And this will be 13th of January. This is how I calculate the, yes, Adarsh, correct. This is how I calculate the average due date using our formula. That's all. Very simple concept it is. Now let's do a real problem and learn how to do it. Okay, let's take this one question. I've picked up some questions which I think are important and also easy to discuss the concept. So I've picked such problems. Now, calculate the average due date from the following information. They've given the date of the bill. It's a bill of exchange. Now, here it's given date of the bill. When they say bill, we have to consider it as bill of exchange. They have also given the term of the bill. So this is the term. Amount is also given. Fine. We have to calculate the average due date. Let's do it. Calculation of average due date. See, the due date is not directly given. So we have to draw a table of 6 columns. Remember, if the due date is directly given, we just have to draw a table of 4 columns. I'll tell you what these 4 columns are. Otherwise, we have to draw a table of 6 columns. So the 6 columns will be like this. The due date is not given in the question, okay? They have given the date of the bill, they've given the term of the bill, they have not given the due date. So we have to calculate the due dates and we have to calculate the average due date after that. So first, 6 columns in our table. So date of the bill, term, due date, amount, outstanding days or intervening days, and then we need the product. So date of the bill is given 1/3/21, 10/3/21, 5/4/21 as it is. Whatever is given in the question, I'm writing the same thing. 10/5/21. Term is given in months. So you can write over here months 2, 3, 2, 1, 2. Okay. Remember, these are bills of exchanges. So the Negotiable Instruments Act will become applicable for this question. So we will have to add 3 days of grace whenever I'm calculating the due date as per the Negotiable Instruments Act. If it's a promissory note, if it's a bill of exchange, we have to add 3 days of grace. Otherwise, no. So now it is very clearly given that it's a bill of exchange. So we will have to add 3 days of grace. Have you all followed? There's no confusion there, right? So 1/3 plus 2 is 1/5 plus 3 days is 4/5. 10/3 plus 3 is 10/6 plus 3 days is 13/6. 5/4 plus 2 months is 5/6, 5th of June, plus 3 days is 8th of June. 23 April plus 1 month is 23 May, plus 3 days is 26 May. 10th of May plus 2 months is 10th of July, 10/7, plus 3 days of grace is 13/7. Amounts again as it is, whatever is given, just copy paste it. 20,000, 15,000, 10,000, 18,750, 25,000. So now we have to select the base date. Base date will be the earliest date among these dates. So I see 4-5 is the earliest date. There are 8-6, 26-5. No, 4-5 will be taken as the base date. Write it clearly at the top of the table when you're solving the problem in the exams. Base date is 4-5-21. So 4-5-21 to 4-5-21 is 0. 4-5-21 to 13-6-21. So you have to calculate, okay, from 4th of May up till 13th of June. How many days are there in between? You have to calculate from 4th of May till 13th of June. So you have to calculate the number of days in between those two dates. In between those two dates, you have to calculate how many days are there. So in the month of May, 4 days is already over. So we have 27 more days left in May. It's a 31-day month, right? May is 31 days. So in that 4 days is over. So 27 days are left. In the month of June, we need 13 days. So totally 40 days will be my outstanding days. Similarly, 4th of May to 8th of June. So out of 31 days in May, 4 days is already over. So 27 days plus 8 days. So 35. Then 4-5 to 26-5, same month it is, so 22 days. Then 4-5 to 13-7. So here again we have to calculate. 27 days left in May, 30 days in June, 13 days in July. So in June we have 13 days. I hope you know the number of days in each month. So this will be how much? 70, right? 0. 15,000 into 40. 6 lakhs. This is 3,50,000. Write 10 and 6 very specifically, just like write it nicely, cleanly. Okay, you should not get confused that you will waste time. 18,750, 22. Don't do silly mistakes. Avoid silly mistakes in the exams. Don't make your life difficult. Okay. So now calculate the total of the product. What's the total of the product? 6 lakhs plus 3,50,000 plus 412,500 plus 17,50,000. How much is the total? 31,12,500. And the total of the amount is 88,750, right? I hope all of you are doing with me. Yes, thank you, Mangalore. So ADD, the formula for ADD is base date plus or minus total product divided by total amount. Yes, sure. So the base date is 4-5-21. Total product is going to be 3,11,000, not 3 lakh, 31,12,500 divided by 88,750. What is the result of the division you get? Is it 35.07? Round it off to the nearest whole number, which is 35 days. Okay, super. Now we have to add 35 days to 4th of May. 4th May, we have to add 35 days to that date. So we have 27 days left in May and we need 8 more days. So you can calculate. You put 35 on your calculator minus 27 in May. So 8 days from June we will need 8 days in June. No, nearest whole number, Pradesh. 8th of June, 21. Actually, logically speaking, it should be 36. That's right, Pratiksha, whatever you mentioned. But the institute follows the nearest whole number logic. So we're also going to follow like that only. So the latest materials and all of it, they follow the nearest whole number. But logically speaking, you're right. It should be the 36 days. That's actually correct logically, but we will follow what the institute does, right? Answer is 8th of June 21. I hope everyone has understood this. I hope you've got this. Okay. Now, one more question, which is important and a little bit more time consuming than the question we just did. And the formula, I hope everyone is comfortable. I'm not going to do too many questions. You can try on your own. These are easy stuff, right? So I'm not going to do too many questions. I'm directly going to go to the next concept. Okay. So the next concept is calculation of average due date when there is purchase and sale with the same transaction. So with the same party, I mean. So purchase and sales with the same party. That time what to do? Yes, Mahidar. You had asked me about. I saw after I ended the session. You had asked me about the normal loss thing, right? Can I discuss it in the evening session? I will tell you how to do it. There is one question from the past exam papers. It's not there in our ICA material and it's not there in the latest RTPs nowhere. So it's not very important, but I will tell you because you asked me. I will tell you in the evening. Is that fine? Okay. Mahesh said the following bill receivable and bill payable against Rajesh. So this is a new concept. What is this concept about? I will just tell you. So through the question itself, I will discuss it with you. Mahesh said the following bill receivable and bill payable against Rajesh. Calculate the average due date when the payment can be received or made without any loss of interest. Okay. So here, also similar question it is, but only thing that happens over here is, see, Mahesh has the following bill receivable. There are how many bill receivable for Mahesh? There are five bill receivables for Mahesh towards Rajesh. Okay, and there's also bill payable for Mahesh to Rajesh. So there are three bill payables. So here there are both. I have to receive some money from Rajesh. I'm Mahesh. I have to receive some money from Rajesh, and I also have to pay some money to Rajesh. So two-way transactions are there. So in this case, now we have totally eight bills over here, five receivables, three payables. We net it off and we calculate how much is what is the average due date of all the eight transactions put together. Okay, so let's solve it. So what the institute does is institute does two tables. You can also have a single table, but we will do as per the institute solutions only. So one for bill receivable, one for bill payable, and the due dates are not directly given. Therefore, we will have to have a six-column table like this only. Six-column table. Two tables we will have to draw. One for bill receivable, one for bill payable. If the due date was directly given in the question, I would draw only a four-column table. If the due date was given, right, I will start with the due date column and I will go till the product column. If the due date is not given in the question, then we will have to write these extra two columns as well. So let's draw the table twice, the same table. and do it simultaneously. Both the tables you draw it together and keep it. In fact, you can draw a long table. This only table can be drawn long. Okay. So you have the date of the bill. This is for bills receivable. Tenure or term of the bill, due date, and you need the amount, outstanding days, product. Same thing again, repeat it again. In fact, what I was telling you was you can extend the same table by a bit and you can have it in this table itself. Okay, so I'll tell you how to do that. So date of the bill is given 12/6 for bill receivable and for bill payable. Together you can do, or you can do it separately. Instead of does like this, it does separately. Okay. So now first bill receivables, we have five bill receivable, write the dates 12/6/20, 10/7/20, 15/7/20, 12/6/20, 28/6/20. Terms are given 3 months, 1 month, 3 month, 2 months. These are bills of exchanges. So while calculating due dates, we have to add the grace period as well because it's bill of exchange. This is for bill payable. Another table, same column headings. Dates are 27/5, 20, 7/6/20, and 10/7/20. Terms are 331. Okay. Now calculate the due dates. The due dates. We have to add 3 days of grace, remember, and also read the sentence below. 15th August was a public holiday. So if it's a public holiday, as per Negotiable Instruments Act, if it's a public holiday, then the maturity date or the due date will be the previous day. If it's a public holiday, okay, it should be taken as the previous day. If it is a sudden holiday, however, 10 September was also suddenly declared as a holiday. If it's a sudden holiday, then as per Negotiable Instrument Act, the effective due date will be the next date. So we will have to take the next date. 11th September. Whenever there's a 10 September due date, we'll have to take it as 11th September. If it is 15th August, we'll have to take the 14th August. Okay, 12/6/20 plus 3 months is 12/9/20 plus 3 days is 15/9/20. 1 second. 10/7/20 plus 1 month is 10/8/20 plus 13 is 3 days is 13/8/20. 15/7 plus 3 months is 15/10 plus 3 days is 18/10. 12/6 plus 2 months is 12/8 plus 3 days is 15/8, and 15/8 is public holiday, right? They've given it's August 15th, that is Independence Day. So we'll have to take the previous day, 14/8. 20. 28/6 plus 2 months is 28/8 plus 3 days is 29, 30, 31. It's August 29, 30, 31. So 31/8. Be careful with these calculations. 28/6 plus 2 months is 28/8. You should add this first. Okay, don't add 3 days first. Add 2 months first and then add 3 days. Don't make the mistake of adding 3 days first. Grace period first add madodalla. You don't add the grace days first and then you don't add months. You have to first add the months and then add 3 days of grace. I hope that's clear because you get different answers if you do that. So you have to be careful. You have to add the first you have to add the term, and then you have to add 3 days of grace. 3 days of grace follows the term. Term does not follow the 3 days. 3 days follows the term. So remember that. Okay. And calculate the due date for this also. Don't decide on the base date before calculating the due dates of both the tables, because the base date must be common base date for both the tables. So you have to take the earliest date among both these tables put together. Okay. I hope I'm clear. 27/5 plus 3 months is 27/8. 3 days is 38. 7/6 plus 3 months is 7/9 plus 3 days is 10/9. 10/9, they've given something, no? 10/9 was a sudden holiday. So next date, 11/9. These two dates very important. Okay, don't mess that up. 10/7 plus 1 month, 10/8 plus 3 days is 13/8. 5,000, 6,200, 3,500, 1,500, 2,500. Amounts 3,700, 4,000, 5,000. Okay, right, sir. Now, before this one, you can select the base date. Let's select the base date. Which one to select as the base date, sir? Sir, you have to consider both the tables. Okay, you can't see just one table, or you can't have two different base dates for each table. You should have one single common base date for both the tables put together. So you have 8 dates altogether. So take one common date among the earliest date. So I see 12/6 is the earliest date from the first table. No, sorry. You have to look at the due dates. Don't look at the date of the bills. Look at the due dates. So from the first table, what is the earliest date, guys? It's 14/8. 13/8. 13/8 is the first earliest date I see from the first table. Second table also coincidentally has the same earliest date. So base date is going to be 13/8. For the whole problem, it's going to be 13/8 for both the tables. Am I clear? Have you all understood? Are you all with me? Yes. 13/8 is the base date. Now, go calculate the outstanding days. So 13/8 to 15/9. So we have 13/8 August. We have how many days left? We have 18 days left, right? August has 31 days. 13 days is over. So 18 days is left in August. Plus 15 days in September. 33. 0. 18 days in August. 30 in September. 18 in October. How much is this? It's 3666. 1 day, and the next one is 18. Right, right. So we'll check. And here also 13/8 to 38, 17 days. 18 plus 11, 29 days. This is 0. 5,000 into 33. 1,65,000. 66 into 3,500. 2,31,000. This is 1,500. 2,500 into 18. 45,000. Total of the product. 4,42,500 is the total. Guys, be comfortable with using the shortcuts like GT buttons and all on your calculator so that you save time. Okay. 18,700 is the amount of the first table, total amount. So this one, 3,700 into 17. One lakh 16,000. 0 GT 178,900. This is 12,700. Next, ADT is equal to base date plus or minus. Here the formula changes. It's not total amount divided by total product divided by total amount. No, here it's slightly different. Here the formula is difference in product divided by difference in amounts. So the base date 13/8 was the base date 20, right? Difference in product 4,42,500 minus 1,78,900 divided by 18,700 minus 12,700. What would be our answer? You get 43.93, which will be 44. So add 44 days to 13/8. So put 44 on your calculator. We have 18 days left in August. We need 26 days from January. Have you got this answer? Yes. That is my average student. Okay, few things before I go to the next unit. I have quickly finished this. I've just done 2 questions. So it's a very simple unit. It's scoring also. Don't skip this. You have to do this. So few things before I go to the next unit. Sir, will the holidays be given in the question? Okay. First things first. Will the holidays be given in the question like this, or should I sit and buy out the calendar? Hosa calendar banne I've got the new calendar of 2024. Should I sit and buy out the calendar, or will they give the holidays in the question? Sir, you don't have to buy hard the calendar. It's not make sense, right? So what you have to do is you have to remember some dates. Okay, sometimes they might not give in the question. They might not give us the holidays. There are chances, very rarely, never happen in the exams, but very rarely, if this is not right for you, there is a chance that if they miss the holiday, should we make some assumptions? 2-3 days you remember as holidays, public holidays. One is 15th August is a public holiday. 26th January is a public holiday. 2nd October is a public holiday. So remember these 3 days that these are public holidays. So if it's 25th December, Christmas, that is also public holiday every year. That also you can assume, but whatever assumptions you're making, just give a note in the exams. Okay, just give a note, place it. If you're making an assumption, give a note clearly that was this is public holiday due to this celebration of this Christmas or this. Give some reason why you've taken it as a public holiday. That's all. And go ahead with your answer, no problem. You just have to give a note. Remember that. But 99.99%, they will only tell you what the holidays are. Like this, they'll give in the question. Okay. And one more thing is with regards to the bill of exchange and a normal credit. So if it's bill of exchange or promissory note, only then we add up 3 days of grace. Otherwise, 3 days of grace is not to be added. Remember that. 3 days of grace is not to be added. And if it's a normal credit period problem also, then holidays don't count. Okay. That holiday will come only under Negotiable Instruments Act. So if it's a normal credit period, you will take that date itself as a payment date. Okay. So that you remember. So if it's a normal credit period, this holiday concept is as per the Negotiable Instrument Act. Previous day, next day, it's all as per the Negotiable Instrument Act. If it is not given that it's not a bill of exchange, it's normal credit period, you don't have to consider the holiday concept at all. Am I clear? Have you understood this? Again, they will give everything. You don't have to worry. But just saying. Then write the answer clearly. What is your answer? Average due date is equal to. You have to write it very clearly. Average due date is so and so date. Like this 26 9 20. Write it neatly, write it clearly, double underline it, highlight it so that he looks at that first. The valuer will look at that first and then he'll go to the answer, how you've done it and all. So generally, if the answer is right, you'll get full marks for questions like this. So write it very clearly. And then there are some more questions with regards to interest calculation sometimes on average due date. So now they will tell that the payment was made on, let's say, 31st of October. So 26/9 was the average due date, but the payment was made on 31st of October. So in that case, you have to calculate interest for so many days. So on this date, on 26th of September, there's no interest, but he's making a delay. So you have to calculate the interest. So the such questions, you can just have a look. A very simple concept. So average due date maximum, this much may be asked, can be asked from your exam perspective. Do not skip this. In fact, you can sit and do quickly all the questions, or you can just go through those questions quickly today and finish this off. Don't keep it for the last, finish this off. One more tip. Now see, whatever I'm doing now in the marathon sessions, how important is this for our preparation? See, today is 26th of December, right? Yeah, I'll answer that question after. Before that, so today is 26th of December. So today, I have on purpose picked up these chapters. I'm not doing this just for the covering the chapters sake. I have kept your interest in mind. So that was the first priority for me, right? Always. So your interest in mind. So that is why I picked chapters like this. Now today you sit and do 1 o'clock. I finish my session. Do you have a session after that? I don't think, right? In the evening, I only meet you again at 6 o'clock. I think all your subjects are done. If I'm not wrong, I don't know. I haven't seen your timetable. So my assumption is you don't have anything in the afternoon from 2 o'clock, from 1 o'clock to 6 o'clock. You're free, so you can. Is that right? For I continue saying say yes or no. Do you have anything in the afternoon from 1 o'clock to 6 o'clock? Is there any other subject in between? Any other session? You're free after one. Okay. So in between those, you get those 5 hours in between. So what you should be doing is you should be doing these chapters, whatever I discussed in the morning. Now I finished consignment in the early session. In the first session, we finished consignment accounts. We did three questions. We did three very important questions. If you were not there, please watch that video and finish that off. And then now I'm doing average unit. I'll be doing account current. I'll be doing BRS. I'll be doing a bit of rectification of errors if I get some time. So we are going to cover up all these chapters in the morning sessions itself. In the afternoon, you have to finish up these chapters. You have to finish. So whatever I do in these 2 days now, I'll not be able to do all the chapters, but I will try my best to cover as much as I can. So whatever I do in these 2 days, you have to finish it off in these 2 days. Done, once for all done. And then you have 28, 29, 30. You have 3 days. Sit with the other chapters and finish it off. 3 days you sit with those other chapters, whatever you want to do, whatever you're finding difficult, do it for the for the 3 days, right? For the next 3 days, you can do that. Now, 26 and 27, give it to this, sit with me, solve these questions with me. And 7 hours sessions we have, 2 days, 7 or 8 hours we get. So 2 days, we sit and we finish it. If you have any doubts, solve those doubts relating to these chapters. These are simple, quick, doable chapters that I'm going to do in these 2 days. So that the easy chapters I covered, and you can easy also some of the difficult problems and difficult chapters also. Every chapter we'll try to cover. So obviously we'll be going through a lot of things. So we will cover it in the sessions itself. And whatever additional doubts you have, questions you have, you can just ask me during these sessions. Okay. And use this as part of your overall preparation. Overall preparation, I'm sure you're doing it well. Use this as a boost, and it's a good thing that when I'm here just 5 days before your exams, so that you can start your preparations with me for exams. The last leg of your preparations, you can start it with me over here, and then you can continue. I will handle till tomorrow evening, and then it's for you. You can finish it. I'm sure you can do it. So be with me whenever I'm for all of these discussions. Be with me. Generally, I have already done this chapter, sir. What should I do? Right? That question will come. Average route is very easy, sir. I can do, but I would still advise. I took 45 minutes for average routed. So if you had spent 45 days, I cover 45 minutes with me. Now I covered some important points, and if you had some doubts, you could cover it. So 45 minutes is not a lot of time. So just sit and finish of these small units with me itself. Even if you know it, even if you finished it, you just spend some time and we will be done with it. You don't have to worry much after this. Of course, you have to solve some questions during that afternoon time. You can sit and solve some more questions, and you'll gain confidence. Remember, final few days, final 4 5 days, it can change the game forever for many of you. So do it with a lot of purpose, do it with a lot of energy. Don't take it easy now. Okay. Don't take it easy. Don't say I will see the video later. It will be available on YouTube. I'll see it later. I'll see it later. Don't do that. Sit straight now and listen to the session. Do it with me. Take it with all the seriousness. Even if it makes a difference to say 5, 10, 15 marks, it will make a huge difference in the long run. So please do it. And so there are some things I don't understand. When you teach, probably you go fast, obviously. We can't complain because it's the marathon session, right? You're supposed to run. So you may go fast. I have not studied this. What do I do? So try to understand as much as you can. And also, if you're not understanding something, just try to mug it up or do it. Satisfy yourself that I know this, I can do this. So that's all we want at this moment. Okay, now next we will do account current. Again, a similar chapter. So we're going to finish this off as well. Again, a 5 mark question will be asked. The problem with this unit is it's an easy unit, but it is a time consuming problems, right? It will just drawing up the lines will consume a lot of time. So that's why it's a little time consuming. Will need little practice from your end. You will have to practice a little bit. Only then you can do it efficiently in the exam. So here, the problem is not accuracy of your answer. It's more about efficiency, doing it fast and doing it correct. Okay. So now let's discuss this particular concept quickly. I'll just start with the problem. I'll not waste too much time. From the following particulars, prepare an account current as sent by Mr. Amit to Mr. Piyush. First thing you have to recognize is who is preparing the account current. Okay, that's the most important part. That's the most important concept. Who is preparing the account current? So now, whoever is sending it is preparing it. So as sent by Mr. Amit to Mr. Piyush. So who is preparing the account current? Mr. Amit is preparing the account current and giving it to whom? It's being given to Mr. Piyush. As on 31st December 2020, by means of product method, charging interest at 8% per annum. So product method they have told. And then they have given us some adjustments. Okay, let's draw the table quickly. I have the format ready. Okay. So now the title of this account current will be like this. Mr. Piyush in account current with Mr. Amit. Whoever is preparing the account current, his name will come at the end as on 31/12/2020. So look at the format. So it's basically a ledger account that we are preparing. It's an extended ledger. It's the normal ledger that you prepared. We just add three columns to it on each side. A ledger will generally have three columns, right? Three important columns, except for that folio column. There will be three important columns: date, particulars, amount. So it's these columns: date, particulars, amount, date, particulars, amount on the credit side as well. So on both the sides, we will have the ledger columns. It's the ledger account. It's like Piyush's account in the books of Amit. These three columns represent ledger accounts. Piyush's account in the books of Amit. And then for interest calculations, account current is a statement wherein we calculate the interest. Okay. So we need three more columns. So these are three extra columns that we make: due date, outstanding days. There's one more. It will depend on the method which we are following. So if it's product method, here product will be written. In this question, they have said product method. Popularly, product method is only asked in the exam. So we write product over here. Same thing on the other side also. Due date, outstanding days, and product columns. So totally 12 columns we will have in the table. So the 6 columns are from the ledger itself, and the additional 6 columns are for interest calculations. I hope it is clear, the format. You don't have to mug it up. It's a simple format. If you know ledger format, the same three columns plus 3 more columns we add. That's all. Okay. I'll start. Now, whose perspective should I think? I should think from whose perspective? I should think from Amit's perspective. Okay, Amit is preparing this. We are Amit now. We are preparing from Amit's perspective. Balance due from Piyush. So balance due from Piyush means what is it? Is it receivable or is it payable? Balance due from Piyush. That means Piyush has to give me, right? So it's an asset for me. Asset will have what balance? Asset will have debit balance. So on the debit side, we have to write to balance brought down. To balance brought down. If they had told balance due to Piyush, then it's a liability for me. I have to pay it to Piyush. Then I'll write it on the credit side. I'll write by balance brought down. Here they've said balance due from Piyush. Piyush has to pay me. I have a receivable. So it will come on the debit side. Amount is 900. Amount column. We don't write the due date for the opening balance. Sold goods to Piyush. What is the entry for sold goods to Piyush from Amit's perspective? It's sales. So what is the entry for sales? Piyush's account is to be debited to sales account, right? Piyush account debit to sales account. So this is Piyush's account. On the debit side, I will have to write to sales. Piyush account is debited and to sales account, sales is credited. 1,450. Due date is not given. We write the transaction date itself as the due date. 15/10/20. Next, goods returned by Piyush. What do you mean by goods returned by Piyush? That is sales return. Piyush is returning the goods. So it is sales return. What is the journal entry for sales return? Sales return account is debited and Piyush's account is credited. So on the credit side, this is Piyush's account. So on Piyush's account credit side, I write by sales return. So this is on 2010. Amount is 250. So due date is not given. Now listen, for written transaction, if the due date is not given, normal, we write the transaction date itself. Here the due date is not given, I write the transaction date itself. But if they had mentioned like this over here, written by Piyush, out of the goods sold on 15/10. If they had given like this, no, then I will write the due date of 15/10 ka transaction. Whatever the due date was there for this transaction, right? I will write that only as the due date for this transaction as well, for the written transaction as well. Are you understanding what I'm saying? If they had said this, if they had told that out of the goods, they had told goods written by Piyush, out of the goods sold on 15/10. If they had given this, they have not given it like this over here. But if they had given it like that, then what I will do, the due date for this return transaction, the sales return, will be the same date as the due date for the sales transaction. The sales transaction due date was 15/10. I will write the same 15/10 over here, but it's not given over here. So we write 2010 itself over here. Okay, fine. Next, you have goods written by Piyush done. Piyush paid by check. Piyush paid by check. So what is the entry when Piyush is making a payment? Bank account debit to Piyush's account, right? The Piyush account will be credited by bank. This is on 22/11. Due date is 22/11. Not given, so I write the transaction date itself. Received cash from Piyush again by cash. $600. Over, sir. This was the data given in the question. We have entered this. Next, we have to calculate the outstanding days. Okay. I'll do it for everything except for balance first. Balance days I'll calculate later. First, I'll calculate for everything else. So, how to calculate the days? So, the days is calculated from the due date till the account current date. From the due date to the account current date, I have to calculate the uh, outstanding days. Okay. Now for the first one, 15/10 to 31/12. So 15/10 means in August, October, how many days do we have? In October, we have 16 days. November, we have 30 days. We have 31 days in December. So 77. Similarly, for this also, like this only. For all the transactions, from the due date up till 31/12, we have to calculate. 31/12 is fixed. Due date keeps changing. So due date to the account current date. So 11 days in October, 30 days in November, 31 in January, 72 days. This is 8 plus 31, 39. This is 16 days. Opening balance also. Opening balance, from the opening balance date, you have to calculate 29 days in September left, 31 in October, 30 in November, 31 in December. So that will be total 121 days. For opening balance, always remember we have to add one day, one extra day will be added. So plus one you have to do. Normal calculation you can do first, do the normal calculation first, and then do plus one at the end. Okay. Opening balance only for opening balance you have to follow this rule. The logic is you have to charge interest even for this date. Generally, we don't charge it for the due date, but for opening balance, because that amount is already due before only. So that's why we include that date as well. So we add plus one. Just remember that much. We do plus one for opening balance. I hope we're done. Next, what should we do? We have to calculate the product. Product is nothing but amount into outstanding days. 900 into 122. 77 into 1450. Over. Product has been calculated. Now some steps needs to be followed. First, we close the product column. We calculate the balance in the product column and we close the product column first. So total of the product column, both sides, and see which side is more, debit or credit side, product column. So I think the debit side looks to be more. So 1,09,800 plus 1,11,650. That's 2,21,450. And the difference is 147.50. We write by balance of product. This is on the account current date, which is 31/12/20. 31/12/20, you get this data. You get this amount. Okay. Now, next, what should we do is we have to calculate the interest. Now, interest will be calculated on the opposite side. So, wherever you've written the balance of product, right? On the opposite side, you have to write the interest. Now, on this side, we will write the interest. On the debit side, I'm going to write the interest. To interest account. This date also is 31/12. Now, the interest formula is interest is equal to balance of product into interest rate into 1 divided by 365. We are following the product method. So we have to calculate it for 1 day. Okay. Product method always 1 day because we've calculated it in terms of days. So that's why 1 day. So the balance of product was how much? What was the balance of product? It was 147,050 into what is the rate of interest given in the question? 8% into 1 divided by 365. 32.2301. So 32.23. I write this in the amount column. The product column is always already closed. So no point in writing it in the product column. Now we write it in the amount column. It's the interest calculated. Okay. Next, we close the amount column as well. We find out the balance in the amount column next. Which side looks to be more? Again, debit side looks to be more. You can confirm. 2382.23 by balance carried down. What's the difference you get? 332.23. Yes. Okay. Very good question someone has asked. Sir, it's a leap year, right? So shouldn't we take 366? You can do that, okay? You should actually do that if the question is silent, but you can also write a note. It is considered that because we don't know if it's a what are they following over here, calendar year or financial year. We don't know if it's a financial year, then it is 365 days. So but we're preparing it on 31st December, so obviously calendar year, no, it's not like that. Account current is not prepared at the end of the year. Account current can be prepared on any date. So we don't know what year they are following. It can be prepared on 31st December. It can be prepared on 30th November. It can be prepared on 31st of October also. So it is not year-end date. 31st December is not the year-end date. So we can assume that it's a financial year question. So that's if it's a financial year, then it will be 365 days, right? Is that clear? So it's subject to assumption. Again, generally the question in the exams will only clearly give you what you should be told. But that was a good question. So it's 2020. It's a leap year. Okay. Can I go to the next question? Sir, can we round off the interest due? Not advised. Up to two decimals, it's always better to write up to two decimals unless given in the question. For example, in this question now, the question that you're seeing on your screen, it's given interest is to be calculated to the nearest rupee. So here, round it off. In this question, you can round it off. But if the question is not mentioning that, don't round it off. Simple. Keep it up to two decimals. Okay. The following are the transactions that took place between G and H during the period from 1st October 2017 to 31st March 2018. So they have given, okay, there's some problem with the dates over here. Make it 2019, read it as 2019 to 2020. 31st March 2020. Okay. 2019, they have given October 1 balance due to G by H. Okay, all of this is given. Drop an account current up to 31st March 2020 to be rendered by G to H. So who's preparing the account current over here? G is preparing to be rendered by G to H. So G is preparing the account current and giving it to H. Charging interest at 10% per annum. Interest is to be calculated to the nearest rupee. 1 year is equal to 365 days. Given. Generally, this will be given in the question like this. Okay. Now let's start with the format. Yes. To be rendered by G to H. So H, whoever is preparing the account current, his name will come at the end. H in account current with G. It's like saying H is account in the books of G. as on. Sir, what method to follow? Interest or product method not given. So the question is silent about the method to follow. We always follow the product method. Okay, product method is to be followed. The answer will be same under product and interest method. You'll get the same answer. But we generally do the product method because that's simpler. The calculations are lesser in product method, so we do it under product method itself. So product columns. So there's this concept of reading interest, which is probably applicable in this question. That's why pay attention. Okay. I hope the format is ready. I'm going to start. Whose perspective, sir? G's perspective. G is preparing this. Okay, G's perspective. G is going to prepare this. So, balance due to G by H 3000. Balance due to G. So, is this an asset or liability for G? For G, what is it? Is it an asset or liability? Balance due to G. It is an asset, right? It is an asset. It's due to me. So, I have to receive the money. So, it will have debit balance. October 1, 2019 to balance brought down. 3,000 rupees. Due date is not to be written for the balance. Opening balance, no due date. Goods sold by G to H. So we are selling goods to H. This is H's account. So the entry for sales is H account debit to sales account. To sales. This is on 1810. Due date is not given. Credit period, due date, nothing is given. So we take the transaction date itself as the due date. So we're basically considering that there's no credit period. Other than the payment because the payment should be made on the same date. So that is why we are taking the transaction date itself as the due date. 1810, 2500. Goods sold by H to G. So here H is selling to us. Here G, we are purchasing the goods, right? So the entry for purchases is purchase account debit to H's account. So H's account will be credited by purchases. This is H's account. So the entry is purchase account debit to H account. This is H account. So H account will be credited by purchases account. This is on 16/11/19. Amount is 4,000. They have given invoice dated 26th November. So this is the due date. Okay, invoice dated means on that date we will have to make the payment. So the invoice date will be taken as the due date. Done. Next, goods sold by H to G. So again, H is selling to us, purchases for us, by purchases. By purchases account, 3,500. On what date? This is 7 December. And this is 17 December, right? Invoice dated 17 December. Fine. Next, promissory note given by G to H. The promissory note will be treated as a bill of exchange itself. Okay, in the books of accounts, we treat promissory note as a bill of exchange itself. Now we have to see if it's bill receivable or bill payable to G. So how do you do this? Bill receivable or bill payable to G? How do you find it out? Very easy. If I'm giving the promise, it's bill payable to me. So if I'm making a promise that I will make payment, I promise to make a payment to H on so and so date. I'm making a promise. If I'm giving a promissory note, that means I'm making a promise that I'll make the payments. For me, it's bill payable. If I'm receiving the promissory note, that means the other party is doing a promise to me. He's giving a promise to me. So here you have to see it's a promise which is being given. Payment to the promise kotta hai. We are giving a promise to make a payment. So you have to see who's giving the promise to make the payment. Is it me or is it the other party? So if I'm giving the promise to make the payment, that means payable for me. If that person is giving the promise to make the payment, that means receivable for me. Simple, right? No complication. So you just have to see who's giving the promise. Promissory note given by promissory note given by G to H. So I'm giving the promise. I'm G, I'm giving the promise to H. So it's a payable for me. I am promising to pay. Simple. No difficulty at all here. So I'm giving the promise. So it's a bill payable for me. What is the entry for bill payable? You have to create a liability for bill payable. So H is account debit to bill payable account. So H is account debit to bill payable account. That's the journal entry. I hope everyone has understood why I'm treating it as a payable. Because I'm giving the promise, right? On which date I gave the promise? 3/1/20. How much is the amount? 5,000. What is the due date? What is the due date for this? Should I add 3 days of grace? The answer is yes. Why? Because it's a negotiable instrument. So 3/1/20 plus 3 months. It's a 3-month promissory note. So add 3 months and 3 days. 3/1 plus 3 months is 3/4 plus 3 days is 6/4. 6/4/20 is my due date. Cash paid by G to H. I am making the payment, cash payment. So the journal entry for cash payment towards H is H account debit to cash account. To cash. This is on 4th February. 1,000. So what is the due date for this? The same date. 4/20. Next, goods sold by G to H. We are selling goods to H. So it is H account debit to sales account. 4,300 on 21st March. And the last one is goods sold by H to G. So H is selling to me. So it's purchases for me by purchases. Purchase account debit to H's account by purchases account. This is on 28th March 20. And 8th April is the invoice date. What is the amount? 2,700. Over. All the data entry job is done. Now we just have to calculate the days. Simple. Let's start calculating the days. Lots, long calculation. 6 months is that. 110 to 31/3. So 30 days left in October, 13 November, 31 in December, 31 in January. Next year is a leap year, right? So it's a leap year, February, but they have said that 1 year is equal to 365 days. 2020 is a leap year. Guys, do you understand my confusion? I'm stuck here. I've added till January, 31 days. For February, should I add 28 or should I add 29? You get my question, right? So should I add 28 or 29? I'm stuck because it's 2020. I know 2020 is a leap year. 2020 February will have 29 days. So I should actually add 29. But the question clearly says that 1 year is equal to 365 days. So you have to consider it a non-leap year. I'm going to add only 28 days. I hope I'm clear there. 31st days in March, 31 days in March. So 181 is the total I get. Plus I will have to add 1 day. Why 1 day? Opening balance. So that's why 182. Next one from 1810. Yes. From 1810, I added only 28 in Feb. Why did I add only 28 in Feb? Because the question said 1 year is equal to 365 days. If the question did not say that, I would take 29 in Feb. Am I clear with this? I would take 29 in Feb if the question said 28. Yes, I went as per question only. Mahidar. The 1 day that I added was for the opening balance. The calculation is right. No, did I get it wrong? 182, right? Okay. Next October. 1810 to 31st of March. 13 days in October, 30 days in November, 31 in December, 31 in Jan, 28 in February, and 31 days in March. So that's 164. Next one. Oh, next one. See this. Next one is 6/4. Now, generally the date comes before 31/3, right? Before 31/3, the date comes, the due dates come. But here it is after the account current date. It is on 6/4. It's April 6. So we don't write it over here. We call this a red ink interest. We write the product on the opposite side for this. Okay, we write the product on the opposite side. So just leave it empty over here. Don't write anything. Next, 4/2 to 31/3. So 24 days in February, 31 days in March. 55. 10 days. 21/3 to 31/3, 10 days. Okay. Next, 4 days in November, 31 in December, 31 in Jan, 28 in Feb, 31 in March. 125. 14 days in December, 31 in Jan, 28 in Feb, 31 days in March. 104. Next one is 8/4. Again, this is also red ink interest. This is falling in the next month. The data is from the next month. So red ink interest will be negative. We don't write it in negative. We write it on the opposite side. Next, write the products. 3,000 into 182. 5,46,000. 2,500 into 164. 4,10,000. Next one, I don't write the product on this side. I write it on the opposite side. Let's do that. The date will be 31/3/20. Only product column needs to be filled on this side by red ink product. We don't write the amounts. We don't write the due date, nothing. Just the product column. Just the product column needs to be filled for this. Okay. So how many days is this? 6/4 to 31/3. It's -6, right? So 31/3 to 6/4 you can do. 6 days you get. So 6 into, what is the amount? 5,000. Only the product column needs to be filled. 6 into 5,000. Product column I will fill, which is 30,000. I hope you have followed this. Only product column, nothing else. Don't fill anything else. Keep everything empty. Just product column. Do the calculation in the bracket and put it in the product column. That's all. Okay. Then 1000 into 55, 55,000. 4,300 into 10, 43,000. 4,000 into 125, 5 lakhs. The product for this will not be written on this side, it will be written on the opposite side. To rating product. So 8th April, that means 8 days into 2,700. 21,600. Only product column is to be filled. For the rating entries, only product column, nothing else. 21,600. That's it. We're done. Now calculate the total. First, we have to close the product column, then everything else, then amount column. Everything else means you don't total up the due date and outstanding days. Only two columns we total up product and amount. First, product column. Okay. So now total up the product column. Which side is more, debit or credit? By the looks of it, the debit side looks more. So I'm going to total up the debit side, 5,46,000, 4,10,000. Then I have 55,000, 43,000, 21,600. The total is 10,75,600. Balance of product is 181,600. I hope you're confirming the answers. Yes. Two. Yes. Now we wrote the balance of product on the credit side, so the interest will be written on the debit side. Opposite side. Interest account 31,320. On the balance of product, you have to calculate interest for 1 day. So 181,600. What is the interest rate? 10% into 1 divided by 365. 10%. So I got it as 49.75. They told us to round it off to the nearest whole number. So 50 rupees. Right? Nearest rupee. So 50 rupees. Calculate the total. Which side is more? Debit side is itself more, is it? 3,500, 2,500, 5,000, 1,000, 4,300. Plus 50. What's the total you got? 15,850. You understood, no, why I rounded it off to the whole number? 15,850, because in the question they've given minus 5,650 is the balance, right? Done. Simple. Nothing to do, yeah. Udupi questions. Okay, so some tips over here. Remember, reading interest means what? If the due date is falling after the account current date, we call it as reading interest. So the due date for such for the product for such transactions will be calculated on the opposite side. Just remember that much. The product will be calculated on the opposite side. Nothing else you have to remember. You don't write the product on that side, you write it on the opposite side. When the due date is falling after the account current date. Here there were two transactions like that. One was on 6/4 and the other one was on 8/4. So the 6/4 was on the debit side. So I wrote the product on the credit side for that 6/4 due date ka transaction. And there was one more on the credit side, 8/4 ka due date. I wrote the product on the debit side. That's all I did. All of the steps are normal. I hope we're done with this. I hope you have understood this. This is the maximum they can ask from account current. There's no twist you can expect from here. I've done only product method. Interest method also is easy, but what is important from the exam perspective is the product method itself. Okay. Be careful about the number of days in February. Don't mess it up. I'm just worried that you end up doing some silly mistakes. Don't do it. Be careful. Look at the question properly, read the question, get the facts right, and who's preparing the account current, who is it given to, entries, and all of that. What about the table presentation? Okay. So there's one good question this I keep getting, especially the presentation part, right? During this session, I want to focus more on presentation as well. So, sir, this table is too big. Now you have unlimited page over here. You will, write. But in exams, you don't have unlimited page, right? If I start writing, it will come outside the booklet. I'll have to write on the desk and come. So what do we do? Can I do it on two pages combined? Not advised. Not advised. Try to fit in into that page only. Try to fit it into that page only. Uh, one advice that can be given is have these due date columns as small as possible. You don't have to do it too wide because due dates are not used anywhere. Just due date, one small column you can draw, like LF column, right? A small column you can draw and try to fit in there. Amount column is what is important. Outstanding days, again, it is days. You don't need it too much. So again, you can compress that column. Product column is important. Date, due date, outstanding days can be compressed a lot. And try to fit it into the page only. Do it normally. Don't flip the book and all. I just checked now the system allows them to rotate the page, but again, I don't think. I mean, now it's valuation happens online. Your papers are scanned and sent to the valuers. So till last attempt, they did not have a rotate option on the screens, but now the valuation system for this attempt, for the intermediate attempt and the final attempt, they have updated the software and they can actually rotate the screen now. But it is again, I wouldn't advise you to write it horizontally. You understand what I'm saying, right? This is the page. I write like this. No, I try to fit in like this only. Uh, you can do this, but I wouldn't advise try to fit it in like this only. Spoken to value is about these things. So my advice is this: try to fit in like this only as much as possible. It's possible. And due date also, you don't have to write the due date for this question. Let's say for this question, the due date was same as transaction date, right? For none of the day transactions, they had given any due date. So if it is like this question comes to your exams, then you can skip the due date. It's the transaction date itself. In fact, you can write it in the brackets only. The due date, just write the due date in the brackets only. That is also fine. If you're still having a problem with fitting it into a page, this is one more advice I can give. Skip the due date column. Have 5 columns each on each side. Sir, what about the account current with bank? We have a question. I'm going to do it. I finished the conventional questions. We will do one more type method of preparing the account current. This is from your ICM material. Has come for the exams before. Nice question. Shall we do it? Yes. On 2nd January 2020, Vinod opened a current account with the Allahabad Bank Limited and deposited a sum of rupees 30,000. He further deposited the following amounts. So 15th January, 12th March, 10th May, his withdrawals were as follows: 15th February, 10th April, 15th June. Show Vinod's account in the ledger of Allahabad Bank. Interest is to be calculated at 5% on the debit balance and 2% on the credit balance. The account is to be prepared as on 30th June 2020. Calculations may be made correct to the nearest rupee. Okay. See, this is from the bank's perspective. What have they said? Show the Vinod's account in the ledger of the Allahabad Bank. This is from the bank's perspective. Always remember the bank's ledger format is not like a normal business's ledger format. Normally, your business will have what ledger format? Date, particular amount. It will be like that. But in the case of bank, it won't be that format. In the case of bank, the format is slightly different. It is not date, particulars, amount. Two sides, you have debit side, credit side in the normal ledger. It's not like that. In the case of a bank, the format will look like this. It's the same entries and all are done the same way. The rules of accounting and all is followed in the same way. Even bank follows the same rules. But their ledger format is different. Why is it different? It's different because normally in our ledger, we calculate balance. How often do we calculate balance in normal business? Does it calculate balance after every transaction? Do we do that balance carried down, balance brought down? After every transaction, do I calculate the balance in a normal business's books? We don't do that, right? We do it generally at the end of a month, monthly, weekly, something like that. We calculate the balances. We don't do it after every transaction. I don't sit and calculate how much is the balance, total the debit, total the credit, what is the difference, balance carried down, balance brought down, balance carried down, balance brought down. We don't do that. But for the banks, it's a necessity because their customers will come and ask them, how much balance do I have in my account? How much balance do I have in my account? So they come and ask, they print their passbooks. So it's a necessity for the banks. But for normal businesses, it's not necessary because no one comes and asks them how much balance is there in my account or not. So that's why they prepare ledger normally, but bank have a different format. So their format is something like this. So you have a common date column for both debit and credit. Generally, in our ledgers, we will have two date columns, right? We will have it like this. This is a normal ledger account. So date column for debit side, date column for credit side, particulars column for debit side, particulars column for credit side. So it's like this. And amount column for the debit side, amount column for the credit side. Forget the LF, that's a space number. We ignore it. So this is the format generally. So what does the bank will do is, instead of having two date columns, two particular columns, two amount columns, he will have only one date column one particular column, but amount column we will need two. You can't combine the amounts, right? Debit, credit, you can't combine. So debit amount, credit amount columns will be there. Date column, particular column will be one, in which dates for the debit transaction and credit transactions will be written together. Particulars also for debit and credit transactions will be written together. If it's a debit transaction, I write two over here. If it's a credit transaction, I write by over here, but it is written in the same particulars column. Are you understanding this? I'm sorry for my dog screaming. I'm sorry for that. So I hope everyone is understanding what I'm saying. Clear? No, it's not too much of a disturbance, right? Yes, I'm louder than the dog, right? Okay, so the date particulars column is common, the amount will be written on that respective side itself. And then we calculate the balance of each transaction. So our format will look something like this. Okay. Bank's format will look something like this. One date column, one particulars column, and the debit amount and the credit amount and the balance column. And for nature of balance also, we will have a separate column. Nature of balance and balance column. Amount, balance amount column. Then we will have for our interest calculations, we will have three more columns. One is for outstanding days, debit product, and credit product. This I will discuss. First, we will learn how to enter the transaction in the bank's books. All of you look very tensed. I mean, I cracked such a nice joke. No one laughed. What is wrong with you? I said I was louder than the dog. She was laugh. You're tensed about your exams. Don't be positive. Be chill, man. Be relaxed. Sir, what do you know about our Yate? You will sit and say you finished all your exams. You will sit and say whatever you want. We are the ones going through stuff. No, don't worry. We've gone through this. It's fine. You'll do it. Okay, so the title. Vinod in account current. Vinod's account current with what is the name of the bank? Allahabad Bank. Finally, someone laughed. Relax. So first of all, your joke was not a joke, right? Whatever you cracked did not sound like a joke to any of us. Date particulars. Then you have the debit amount, the credit amount. Then I told you nature of balance and balance column, balance amount columns. We'll fill these three columns later. First, we'll learn how to enter in the books of the bank. Ready? Okay. So now he further deposited. Okay, first, when did he? Who are we now? Yeah, thank you. Who are we now? Are we Vinod or are we the bank? Who are we? Who are we? Who are we? Are we Vinod or are we the bank? We are the bank, right? So from the bank's perspective, we have to think, okay? From whose perspective? Bank's perspective. So now this is Vinod's account. We have prepared Vinod's account. Let's start. Vinod is coming and depositing money on 2nd January. Don't look at the table first. Don't miss this transaction. On 2nd January, Mr. Vinod has entered and given his money. He has given us 30,000 rupees. So 2nd January 2020. Vinod has given us the money 30,000. What is the entry when Vinod gives me money? It's cash account debit to Vinod's account. Okay, cash account is debited because I receive money. And the bank is receiving money. So cash account debit to Vinod's account. So this is Vinod's account. So we will have to credit Vinod's account. So on the credit side, we write. No, here there is no debit side, credit side, but amount only credit side onto credit amount onto. So we have to credit the account with 30,000. And on the credit side, how do we say? We write buy cash. Buy cash. Very simple, very easy. Buy cash 30,000. And balance calculation. Now, there's no debit at all, there's only credit. So it is 30,000. What balance is this? It is credit balance. 30,000 credit balance. Next. 15th. Now you have to see, they have given deposits together, withdrawals together, but we have to enter it chronologically. What do you mean by chronologically? Date wise. Date wise, we have to enter. So 2nd January is done. Next is 15th January. So 15th January, write the transaction. Again, it is a deposit. So he's giving us more money. So what is the entry when he's giving us more money? Cash account debit to Vinod's account. So Vinod's account will be credited. So we will have to credit the Vinod's account. So again, on the credit side, I will write the amount. How much is they giving me? 12,000 rupees. And on the credit side, particulars column, what do you write? Buy cash. So there's common particular column. That's all. The particular column is common. Debit particulars, credit particulars. At the separate there are no separate debit particulars and credit particulars. It's a common column. So, but you have to write that wording clearly. Buy or to, you have to write it properly. What will be the balance now? Opening balance 30,000, credit balance was there. Again, you're crediting. So what should I do when you're crediting again? Should I add or should I minus? It was credit balance. You're supposed to credit again. That means you're supposed to add, right? So 42,000 credit balance. I hope everyone has followed this. I hope everyone is with me. 15th January done. Next, 12th March is the deposit. No, we have to go chronologically. There's a withdrawal there. 15th February. 15th February 20 is withdrawing money. So withdrawing money means what is the entry? So Vinod's account debit to cash account. Our cash is going, right? So Vinod's account debit to cash account. So we don't say to cash. What generally the bank does is, because there are different types of withdrawals, right? You can withdraw through ATM, you can withdraw through cash, you can give a check to your supplier, or you could transfer it to Swiggy, Zomato, Amazon, you could transfer it. So we write how the amount was withdrawn. Like in what mode was it withdrawn? So here it is withdrawn by him. So that is why we write over here to self. It's not wrong if you write cash also, but generally when the banker enters, explanatory purposes, where did the money go? Tomorrow, if he comes and asks, we have to tell him, no, where did this 26,000 go? He will say, to self means you've come and withdrawn from us. So that is why it is written like this one, 26,000, and it is debited. It's debited. On the debit side, you use the word to. So I've written to self. Now, 42,000 is the opening balance, credit balance it was. Now we have to debit. Okay. So 42,000 credit. We will minus this because we're debiting it. So it's how much is the balance left? 16,000 is the balance left. Is it debit balance or is it credit balance? What is the nature of the balance? It's still credit balance, right? I'm not asking for the nature of the transaction. I'm asking for the nature of the balance. We had opening balance of 42,000. Now we are debiting 26,000. So what is more? It's still credit is more, right? Credit is still more by 16,000. Have you understood this? The nature of the balance, you have to write it carefully. Next, 12th March. He's depositing money. So the entry is cash account debit to Vinod's account. So Vinod's account will be credited by cash account 8,000. Now update the balance. 16,000 credit balance was there. Again, we are crediting. That means we are supposed to add. So it will be 24,000 credit balance. 24,000 credit balance. Done. Next, 12th March done. 10th April withdrawal. So the entry is Vinod's account debit to cash account. Again, I'll not write to cash, I'll write to self. He's withdrawing. So I'm going to debit his account. The entry is Vinod's account debit. So on what date? 10th April. 10 for 20. 30,000. We're going to debit his account. Opening balance was 24,000 credit balance. Now I'm debiting 30,000. So here, which is more, debit or credit is more? There was opening balance of 24,000 credit. Now I'm debiting 30,000. So what is more now? The debit is more, right? So the balance will be debit. And how much will it be? It will be 6,000. You just have to compare it. 30,000 debit, 24 credit. So 6,000 is the balance, debit balance. Have you all understood how I'm writing it? Next, 10th May. He's depositing money again. The entry is cash account debit to Vinod's account to buy cash. We're going to credit his account, right? Cash account debit to Vinod's account, 16,000. Again, look at this. 6,000 debit balance was there. I am crediting 16,000, which is more. 6,000 debit, 16,000 credit. 6,000 debit, 16,000 credit, which is more. Credit is more. By how much? 10,000. So credit balance 10,000. Simple. Next, 15th June, he's withdrawing money. So the entry is Vinod's account debit to cash account. So we write to self over here. He's withdrawing 14,000 rupees. So we have to debit his account with 14,000 rupees. So 10,000 credit balance. I'm debiting 14,000. So 10,000 credit, 14,000 debit. 10,000 credit, 14,000 debit. What is more? Debit is more. By how much? 4,000. So I'll write debit balance 4,000. I hope all of you have understood this. Next, we update the outstanding days column. Debit product, credit product. Okay. Now, outstanding days calculation. So how do we calculate outstanding days? Very simple. What you have to do is, it's not like before, it's a little different over here. You have to start calculating from that date, that balance date. What we're doing over here is we're not calculating interest on each transaction. Okay. Generally, under the old, whatever we were doing, the old format, we were calculating interest on each transaction. Amount to give, we were calculating how much is the interest. But under this method, it is not like this, like that. This method is known as product of balances method. Okay, this is product of balances method. What bank follows. So we have to calculate the product on the balance, interest on the balance. So we see on this 30,000, how many days was this 30,000 outstanding? So it was 30,000 from 2nd of January up till 15th of January. So for those many days, we calculate interest. Simple. From 2nd January to 15th January, it was 30,000, right? So how many days is it? 13 days. Like that only. Next, it changed to 42,000. So 15th January to 15th February, it was 42,000. So from this date to this date, you have to calculate how many days was outstanding. So 15 1, so you have 16 days left in Jan, 15 days in Feb, 31 days. Next, 15 2 to 12 3. So 15 2 to 12 3. So how many days left in February? So February, how many days? It's 2020 leap year. So I'm kind of confused. Let's look at the question. Let's see what have they said. Assume 1 year is equal to 365 days. So how many days will our February have? Our February will have 28 days. So it's 2020. Given, sir, 365 days. I am saying as the institute is doing, although the calendar will say something else, but doesn't matter. Institute says it has 365 days. Institute is God. We will follow the institute. So February will have 13 days, 28 days in 2020 for this problem. So we have 13 more days left in February, 12 days in March, so 25. Next, 19 plus 10, 29. Next, you're understanding no how I'm calculating? 20 plus 10, 30. Next, 21 days in May, 15 days in June, 36. Next, 15/6 to what date, sir? The account current date, 15/6 to 36. That will be 15 days. After this, we will have to calculate the product. So the product calculation is very simple. You should multiply the outstanding days with the balance and see what is the nature of the balance. If it's credit balance, you write it under credit product. If it is debit balance, write it under debit product. Simple. So 13 into 30,000, this is credit product because the balance was credit. So 3,90,000 on the credit product side. 42,000 into 31, again credit product, 13,02,000. Next, 16,000 into 25, 4 lakhs credit product. 24,000 into 29, again credit product. 6,000 into 30, what is this? This is debit product. This is credit product. This one is debit product. 60,000. Now leave around 4-line space and then do the total of the products. No calculating balance, calculating the total of the products. Debit product total is 2,40,000. Same way, calculate the total of the credit products as well. 3,90,000, 13,02,000, 4 lakh, 6,96,000, 3,60,000. 31,48,000 is the credit product. Now the interest calculations. Working note, calculation of interest. Sir, can I write WN for working note? Or earlier someone had asked, Adil had asked, sir, can I write base date BD? Can I write due date as DD? Avoid. Working note, also write working note properly in the exams, okay? Don't use shortcuts. Avoid it as much as possible. As much as possible, avoid it. Uh, because we don't know, there's no rule that we can deduct marks, but it's just about our impression. So don't risk all of these small things. As much as possible, write the full forms. Uh, if it's like too much, then yeah, okay, fine. You don't have time, you're running out of time, last 10 minutes, last 15 minutes. That time it's fine. Okay, calculation of interest. Now see, they have given over here, interest is to be calculated at 5% on debit balance and 2% on credit balance. So first we will do interest on debit balance. So debit balance interest means it is interest on asset. Interest on asset. Interest on asset means what? Is it receivable or payable for me? Interest on asset means it's receivable, right? Debit balance means receivable. This is income. Interest income. Is this clear? You can write interest income. So calculate the interest income only on the debit product. So what is the total of the debit product? 2,40,000. The formula is simple, product method. So 2,40,000 into what is the interest rate? 5%. 5 by 100 into 1 divided by 365 product method. So for 1 day, 2,40,000 into 5% divided by 365, 32.88. That's right, no? So don't round it off now. Keep it. The final answer can be rounded off, not now. So for commission calculation, again, no, avoid. It is for our ease of calculations, we do it like that. Write the full forms only. If you want, you can write first time you write the full form and then in brackets you write the shortcuts and then you use the shortcut. So first when I'm writing total commission, I'll write like this. Total commission is equal to, pardon my handwriting, ordinary commission less. So here you write in brackets. So now you get the license to use the shortcut for the next sentence. Overriding commission, write the full form in brackets, you write ORC. Then you can start using OC is equal to ORC because you've given the reference, right? 32.88. Don't round this off to the nearest whole number. Keep this like this only. The final answer is to be rounded off. Okay. So interest on credit balance. So this is interest on liability. So it's an expense for us. Interest on credit balance is an expense for us. So what is the total of interest on credit product? Total is how much? 31,48,000. What is the interest rate on credit balances? What have they mentioned? 2%. Into 1 divided by 365. 31,48,000 into 2% divided by 365, 172.49. Now you have to calculate the net. Okay, the net interest. What is more? Income is more or expense is more? Which one is more? Income is more or expense is more? Expense, right? So net expense. One 172.49 minus 32.88. You get 139.61. This can be rounded off to whole number 140. You're told in the question, no, calculation may be made to correct to the nearest rupee. So don't round this off. Don't round this off. Round off the final answer because your answer could be different if you start rounding off here only. Don't round that off. Round off the final answer. Is that clear? 1 rupee difference you might end up getting. So that's why be careful. The final answer is to be rounded off. So it's an expense. So what is the entry for interest expense from the bank's perspective? So the entry for interest expenses, interest account debit to Vinod's account. So it's payable to Vinod. So Vinod's account will be credited and the expense will be debited. So Vinod's account is to be credited by interest. It will be credited with 140 rupees working note on the account current date you're writing this calculation. And the balance will be so 4,000 debit balance was there. Now I credited 140, 4,000 debit balance, credited 140. So it's still debit balance. We have to minus 3,860. Correct? No. 3,860 is the net balance. Now total of the debit and credit columns. The debit side will be obviously more because there is balance. We've already calculated the balances, but we also close it here. So the debit side will be more. So the total of the debit side will be 26,000 plus 30,000 plus 14,000, 70,000. This is normal ledger balancing. How you balance a ledger normally? Same way. So it is on the credit side. You get 3860. You should get the balance. $3,860, right? What did I do wrong? Yeah, 3860. By balance carried down on the credit side. So I'm writing by balance carried down. And here 1720 you can write to balance brought down. 3860. I hope everyone has got these answers. I hope you've understood this. Are we done? Yes, perfect. So this was account current. We have covered almost everything in account current as well. If you have any doubts, any questions, please do ask relating to account current, average due date, or even consignment. If there's any question, if there's a long question, then I'll do it in the evening session, 6 to 8 will certain do it. Now, if you have any quick doubts, so quick one sentence, you can solve this doubt. You can ask me right away. Okay. No doubt, sir. All clear. Okay. Now we just discussed about the bank. Sir, can we extend the table crossing the border? So you mean to say you want to occupy the margin? No, that is not your margin. That belongs to the valuer. So you can't write there. Don't use the margins, please. That's only for marks allocation. So don't write it there. Don't avoid the margins. You can write the question number there. That's all. Don't write anything else in the margins. Sir, in consignment, there is no normal loss problem. No. In your materials, nowhere in your ICA materials or in the RTPs, latest RTPs, I don't see much of the normal loss question. There was one question from the November 2018 attempt, I think. That was 5 years back when foundation was just introduced. There was one question in the exams. Again, not in the material, but it was asked once long ago. So, otherwise, normal laws questions have not been asked so far in the exams, and it is not. It's just an introduction is there in your syllabus. It is something that you discuss in intermediate actually. So, not very important, but it's ICAI. We can't write off anything. Don't want to say that it will not come to the exam. So just have a look at it once. I'm not going to say anything, but from the institute's material point of view, it's a little advanced for foundation level, honestly. So not there, not a detailed discussion is not there in your material as well. Anything else? Okay, so we finish the consignment, the account current now we finished. Now I'll go to the next chapter I want to discuss, which is bank reconciliation statement, BRS, bank reconciliation statement. So let's talk about this quickly. Simple chapter. You should not miss marks from these chapters. That's why I'm doing these chapters first. Whatever I've done in the morning also, you should not miss a single mark in the exams from these chapters. Okay, these are straightforward questions that generally asked from the institute material questions only, or the past paper or the article. It's from the institute's database. So you cannot afford to lose any marks. In fact, today's whole day session, whatever chapters I'm doing, these are all easy module one chapters I'm doing. So you have to score these marks. 45, 50 marks. Already I've finished at least 15 to 20 marks worth syllabus. Another 10 marks will be done in another 45 minutes. So around 35 or rather 20 marks, 20, 25 marks worth syllabus I finished now. These are important, very important chapters. Sir, I have not prepared much, sir. I've prepared so much. I've studied so much. For everyone, this is important, right? So the ones who are confident of scoring good marks, it's important for you that you don't make any mistakes in these chapters. These are easy marks to score. Don't lose marks over here. And for the ones who've not studied much, this is your, what do you say? This is your key to clear exams, especially accounts, score that extra 10, 15 marks. This is easy. You can still sit and finish it off. So don't uh, take these chapters for granted. Easy chapters, but important chapters from the exam perspective. So now we're going to do BRS. Ready? Okay. So let's start. So what is BRS? First, bank reconciliation statement means what? Bank reconciliation statement means a comparison between the cash book and the passbook. Do you want a small break or something? You want like a 3 minutes, 4 minutes breather? So much processing we can't do. We need a small breather. Do you want a small break? Or can I just go on? Such a nice offer. Like, a nice teacher giving you the option to choose. 3 minutes, huh? Break, even if you want. Quick. I'm waiting for your answer. Okay, we will take a 3 minutes breather. Uh, okay. Take a break. Take a small break, and then I will start. Okay, shall we continue? Okay, before I start solving this question, some basics, basic discussion, which I want you to understand. We will do that. I know you know this, but still, I don't remember. So, revision for me, you just listen when I'm revising. Okay, so first about the balances. Okay, now there are two books involved here, as I mentioned. What are the two books involved? Passbook and the cash book. So, what do you mean by passbook and the cash book? So, see, the bank records all the transactions. We just did Vinod's account in the books of the Allahabad Bank, right? Just now, account current when we did the question. We did Vinod's account from Allahabad's bank's perspective. We did interest calculations and all. That interest calculation and all is extra. That was account current. But generally, till this column, the bank enters. Normally, the bank will enter till this column. This border you keep. So till the bank enters. The next three columns is for interest calculation. But the first, how many columns? Six columns. The bank enters, records. Generally, it records and it keeps. Now, when we are Well, if a customer comes and asks bank's customer, we are Allahabad Bank. Now, Vinod will come and ask, sir, can I see my account in your books? You maintain account. No, can you show me that account? I will show him this. I can't show him the computer link to see by heart your transactions and I can't do that, right? I have to print it and give it to him. I have to print this much and give it to him. This much I will print and give. So before, what used to happen is they used to write it manually. They used to, write. Now, writing it on the piece of paper, drawing the lines and all, that's very troublesome. So they used to give this Mr. Windows one format. The same format they would print and give it to Windows, one book. So the moment he comes and he says, I want to update this, I want to update my account. However, that account is looking in your books, right? So update it. I would just copy it in his book. Same format, I would give one book, printed, pre-printed book. Just like how you have your notebook, how there are journal books, how there are ledger books. Similarly, we used to print a book like that. We used to call it as a passbook. So we used to print it and give it to him. And whenever he wants to update it, he can come. So I updated whatever additional transactions are left to be entered, I entered. Now they print it. Now there are printers, right? You can do it self. There are ATMs where you can go and print your passbook. So pre-printed book is given, you just keep it, it gets printed on its own. So that is the passbook. Passbook is nothing but it's you're getting a look into the bank's books. The bank has opened your account in their books. So you just get a copy of it. That is known as the passbook. So this is from the bank's perspective. The passbook is from the bank's perspective. And then you also record these transactions. You have a bank account. Bank opens your account. So you open bank's account in your book. And that will be in the cash book. So typically we're talking about the three-column cash book over here. So cash book. So if your cash book has debit balance, now the nature of balances we're going to, it means it is a favorable balance for you. It's a positive balance. If your cash book has credit balance, that means it's a liability for you. It's an unfavorable balance. If your cash book has debit balance, that means it's favorable for you. It's from your perspective. Any account, this is a personal account. So if a personal account has debit balance, that's an asset. It's a receivable for you. If your cash book bank column has credit balance, whenever I'm saying cash book in this whole chapter, I'm referring to the bank column of the cash book. Cash book will have a lot of columns, right? Three-column cash book will have bank column, cash column, discount column. So which column am I referring to when I say cash book in BRS chapter? I'm always referring to the bank column. So the bank column, if it has debit balance, it's an asset for me. If it has credit balance, it is a liability for me. It's a liability for me. Very simple. Fine. Now, passbook. Passbook is not my perspective. Remember, passbook is the copy of bank's perspective. So this is not my perspective. This is bank's perspective. Bank is just printing it and giving it to me. It is their account. So in the passbook, if there is debit balance, in the passbook, if there is debit balance, so for the bank, from the bank's perspective, it is an asset for the bank. That means it's a liability for me. It's a receivable for the bank. Bank's receivable it is. Bank has a right to receive money from me. From my perspective, it's unfavorable. If the passbook has debit balance, it's unfavorable. We call it as OD, overdraft, right? Our cash book will have what balance in that case? It will have a credit balance. It's a payable towards the bank. Are you all understanding this? Are you all following? If the passbook has credit balance, if the passbook has credit balance, okay, so that means it's a liability for the bank and it is an asset for me. So it's favorable balance. It's favorable balance if the passbook has credit balance. So this is all you should know about nature of balances. So this is all you should be knowing. Okay. So debit balance in the cash book is an asset, and the debit balance in the passbook is a liability for us. Credit balance, though, we are looking at from our perspective. We are preparing VRS in the books of the business, not the bank's books. We are not bank is not interested in seeing what is happening in our cash. We are interested in what is happening in our account in their books. So we are doing this VRS. The business is doing this VRS. So from the business's perspective, we are thinking. So debit balance in the cash book is an asset. Debit balance in the passbook is a liability. Credit balance in the cash book is a liability, and credit balance in the passbook is an asset for us. Simple. Okay. Now, the nature of the effects given in the books. This is also important. These are simple, basic things I'm talking about. So, see this. In the cash book, if I want to increase something, I will debit. If I want to increase my balance, I will debit. Asset debit market, I'll increase the balance. If I'm crediting, that means I'm decreasing. So I'm crediting the balance. Okay, if it is in the cash book, it is like this. In the passbook, it is ulta. If I want to increase something, they would have credited. Now, for example, you have a bank account, right? All of you have a bank account with respective banks. When you get a message saying that your account is credited with so and so, the bank is increasing your balance. You can check your message box if you have linked your phone number to your bank account. So it is increasing your balance. If they say your account is debited, that means it is decreasing your balance. So it's ulta. Again, that's bank's perspective. So that is why it's ulta. So this is how the effects work, nature of effects. Okay. Now with this much knowledge, we will start with the problems. If anything comes in between, we will discuss it. On 30th September 2020, the bank account of Samir, according to the bank column of the cash book. Okay, no, not this question. I'm supposed to do this one. We'll do this one first. On 31st March 2021, the passbook of a trader showed a credit balance of 15,65,000, but the cash book balance was different. The passbook balance is different for the following reasons from the cash book balance. So what have they given? The passbook of a trader showed a credit balance of 15,65,000. So this is what book are they taking as the base? Which book are they taking as the base? They are taking the passbook as the base and it's showing a credit balance. So what is this? Is this positive balance or is this negative balance? Is this favorable balance or is it unfavorable balance? Credit balance as per passbook. That's favorable balance. Okay, that's liability for the bank, asset for us. So it is a favorable balance, 15,65,000. It's favorable balance. So let's start. Let's not waste too much time. Let's start with the format. So you need a particulars column and you need two amount columns, inner amount and outer amount column. So this is bank reconciliation statement as on. So they have given balance as per passbook. You can write credit balance as per passbook as well. Balance as per passbook. So it's 15 lakh 65,000. Okay. Checks issued to X for 60,000 and to Y for 3 lakh 84,000 were not presented for payment. Okay, now very, very simple. We do it with the help of our hands. Now here I have this hand without anything on my hand. This is my cash book and the one with the band. This is the passbook hand. Okay. So now what you should be doing is you should see which book has moved because of this transaction. Read the sentence clearly and see which book has moved. Check issued to X for 60,000 and to Y 3,84,000. Both are same. Okay. X and Y, we had made payment. 60,000, 3,84,000 were not yet presented for payment. That means we have given some check to them, but they have not taken it to the bank and they have not presented it for payment. That's what it means, right? So I have issued checks to X and Y, but they have not gone to the bank and presented it for payment. Which book has moved because of this? Which of these two books? I have the cash book and I have the passbook. Which book have we moved? Check issued means first where do we record? We record it in the cash book immediately. In the cash book, I would have recorded this. Now he has to go and present it to the bank. That time it will be recorded in the passbook. The banker will get to know. Okay, check issue together. They will write it in the passbook. But here, in both the books, it was not recorded. In one of the books, it was recorded. Which book was it recorded? It was recorded in the cash book because I issued the check. I got to know. I wrote it in the cash book. And what did I do? Did I increase it or did I decrease the balance? I have decreased the cash book balance, right? I have reduced the cash book balance because I issued the check. The passbook entry is not yet made. That's why it's causing a difference. So now what should I do? I have to match the two balances. And I hope everyone has understood this. Check issued. That means in the cash book I'm minus. In the passbook, it's not in minus. Fine. So now we have to match the two balances. So we are reconciling. Which book is my starting point? Which book is my starting point? Sir, idu kello hogi adiki idu mele ಮಾಡಿ no. This cash book has gone down, so just increase it. No, 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 not like that. You have to see which book you are taking as the base. Which book am I taking as the base? I'm taking the passbook as the base. So I have to reach the cash book balance. Ultimately, after all the adjustment, I should get cash book balance over here. So now, in order to get the correct cash book balance, what should I do? I am at the passbook point. I have to reach the cash book balance. What should I do? I should reduce. I should less. I hope you have understood this. If you're starting with the cash book, then what you would do? If you're starting with the cash book, what you would do? You would add. In that case, I would add. Because I'm at this point, I have to reach the passbook point. So I will have to add it. But here I'm at the passbook point. I have to reach the cash book balance. So I'm supposed to minus. First, you have to see the effect of the difference. Why is it making a difference? You have to first see that. And then you have to reconcile. Two-step process. First, effect is always the same. It doesn't matter what is the starting point for this. The effect is always the same. You have to read the sentence and look at the effect. The reconciliation effect will be different. It depends on the book you are taking as the base book. So here you're taking the passbook, so you will reduce. Less check issued but not presented. In the inner column, I can write both together 60,000 plus 3,84,000. That's 4,44,000. Next, bank charged 350 for bank charges and Z directly deposited 1816 into the bank account, which were not entered in the cash book. So, two separate transactions. I will read it one by one. First, bank charges 350 for bank charges. Okay. So, bank charges 350 rupees. Which book has moved? I had not recorded this in the cash book. So, which book has moved here? The passbook has moved, right? The passbook has moved. Bank charges means what? Has it gone up or has it come down? It's come down, right? They have removed from my account. It's come down. Now, what is my starting point? My starting point is the passbook, right? So what should I do? I have to reach the cash book balance. So I have to add. I'll not write the sentence, but the sentence is bank charges not recorded in the cash book. 350. And Z directly deposited 1816. Okay, which book has moved? Z directly deposited 1816. Again, passbook has moved. I did not know this. I did not record this in the cash book, but in the passbook, the entry will be made because he went to the bank, he put the money. So passbook has moved upwards. Now the starting point is what? Passbook is the starting point. So what will I have to do? I will have to less because from the passbook, I have to reach the cash book balance. So less 1816. Two checks, one from A for 5,15,000 and another from B for 12,500 were collected in the first week of April, although they were banked on 25/3/21. What do you mean by banked here? Deposited. So there were two checks from A and B. What is the total? 515 plus 12,500. 5,27,500 were checks. Was collected by the bank on in the first April. That's next year. So we are preparing on 31st of March. So they collected it in the next month. But we had deposited it on 25/3. So I went and put it into the bank on 25/3. So when I deposited it, I would have recorded it in my book. What is my book? My book is cash book. I would have recorded it in my cash book on 25/3 itself. Are you understanding? I would have recorded it in my book on 25/3. So recorded it means what here? It's deposit. So I would have increased my cash book balance. I have increased my cash book balance by 5,27,500. I've increased. But till 31st March, they have not increased. In the passbook, they have not increased. Why? Because they collected that money only in the April month. So they increased in the April month. But now as of 31st March, it's going to cause a difference to us. So therefore, now what should we do? This is how it is. Now I will have to start with the passbook balance, right? The starting point is passbook balance. So I will have to add. Add 527,500. Last one, interest allowed by the bank. So interest allowed, expense, expense, expense. Read the full sentence, yeah. Don't come to a conclusion quickly. So interest allowed by the bank. Which book has moved over here? Passbook. Interest allowed by the bank means is the bank giving me interest or are they taking interest out of my account? They're giving me interest, right? Interest allowed by the bank means banker is giving me money. So now they're giving me interest. In the passbook, the entry is made, so it's gone up. The starting point is passbook, so I will have to less 4,500. Passbook has gone up, so starting point is passbook, so we will have to minus. Done. That's total up 527,500 less 350, 527, 850. Tell me the ultimate balance as well. What is the last final balance? 4,44,000. So don't forget to put this in brackets like this, because in the exam, in that panic mode, there's a chance that you may end up adding this also. Now it sounds funny, but exam is different. So that is why don't take any risk. So put it in the brackets clearly. What's the balance you get? Are you all there? 16 lakhs 42,534. This is balance as per. We started with passbook, so this will be balance as per what? Cash book. I hope you've understood this. You just have to match the two balances. That's all. First, you have to see what is the effect of that. These are all differences. These sentences, whatever they give, generally they cause a difference between the two balances. Okay, two books into difference ಇರ್ತದೆ. ಅದು ಯಾಕೆ ಡಿಫ್ರೆನ್ಸ್ ಇರ್ತದೆ, ಒಂದು book ಅಲ್ಲಿ ಎಂಟ್ರಿ ಆಗಿರ್ತದೆ. Generally, that is the problem. In one book, they would have entered that transaction. In the other book, the transaction is not entered. So now you have to see which book the transaction is entered, in which book the transaction has been entered. So then you have to see entry is made in cash book. Okay, fine. Entry is made in cash book. Has it gone up or has it gone down in the cash book? Okay, fine. It has gone down. So now you have to see how to match the balances. Passbook is the starting point for this whole question. So let's simple. So they have entered this in the passbook. They're not entered in the cash book. Bank charges, for example, entered in the passbook, not entered in the cash book. So passbook entry is made and bank charges. So that means passbook balance has gone down. My starting point is passbook. I have to reach the cash book balance. I've learned. Well, no. Is that clear? Have you all followed it? Yes. Now we will do this question. Sir, what if it is an OD balance, overdraft balance? Should we learn some new rules? No. If it is OD balance, what my advice would be is think of the opposite book. Think of the starting point as the opposite book starting point. I will do with one example. So we'll do this question. Very nice question. Has a lot of adjustments, covers a lot of points. So pay attention. Okay. Let's look at this question. On 31/3/2020, Mahesh's cash book showed a bank overdraft of 98,700. On comparison, he finds the following. So BRS, prepared BRS as on 31/3/2020. So they have given first, what have they given? Mahesh's cash book showed a bank overdraft. So OD or credit balance as per cash book. Negative balance, no. in our books. So credit balance, or you can also write OT balance as per cash book. How much is that? 98,700. See, before I start reading the adjustments, 98,700. Before I start reading the adjustments, when it is OD balance, as a simple trick, what I do is I change the balance of the I change the book altogether. So I think of this question as balance as per passbook. Normal balance as per passbook, I will assume. And I'll solve the whole question like that. Balance as per passbook question, how I would solve. I would solve the whole question like that. Is this clear? So we will treat this as balance as per passbook. Okay. Now let's start. Out of the total checks of 8,900 issued on 27th March, one check of 7,400 was presented for payment on 4th April. And the other check of 1,500 handed over to the customer was written by him. And in lieu of that, a new check of the same amount was issued to him on 1st April. No entry for the return was made. Okay. First, they have said total checks 8,900 was issued on 27th March. There are two transactions here. I'm going to see one by one. First one, on one check of 7,400 was presented for payment on 4th April. Simple. 7,400 check we had issued. 8,900 was the total, but total is not relevant for me. You have to see the particular transaction. What is causing a difference? You have to focus on that transaction. Because they're saying one check of 7,400 was presented for payment on 4th April. Fine, this is causing a difference. Why is it causing a difference? Because see, we issued the check on 27th March. So that is what I do. When I issue the check on 27th March, immediately I will minus it in my cash book, right? I have minus it in my cash book. But that was not presented for payment on the same date or not before 31st March. They presented it for payment on 4th April. So that means till 31st of March, I am preparing the BRS on 31st of March. Till 31st of March, the passbook has not moved for this one check. Are you understanding? It has not gone down before 31st of March because it was not presented for payment. The person to whom I had given the check has not taken it to the bank. So the banker has not entered it in the passbook. The banker has not entered it in the passbook. But I have entered it in my cash book. I have entered it in my cash book because I had issued the check on 27 March. So I have minus it in my cash book, but in the passbook entry has not been made. Now, what is my starting point? Although ODS for cash book is given, but my starting point, I told you, whenever there's OD balance, you have to take the opposite. So my starting point is passbook. Now, what will I do? I will less this amount because it's like this. In the cash book, I have minus, the passbook balance is more now. My starting point is passbook balance. So I will less. Whenever there's OD, ulta. We take the ulta balance. So less. Guys, are you following? 7,400. Okay. And the other check of 1,500 handed over to the customer was returned by him. And in lieu of means instead of that. So in replacement of that, a new check of the same amount was issued to him on 1st April. So that second check was issued on 1st April. That doesn't make a difference. 31st March check, a second check. Instead of the old check, we gave a new check, right? So that can be ignored because that is in the next year itself. The whole transaction is in the next year. It won't cause any difference. But the first part there, 1,500 was returned and no entry for the return was made, they have said. So that I had issued a check, but that person has given that check back saying that it's probably not properly written. I did not write it properly. The date was not written properly. The amount was not clear. After write the amount in words, that was not clear. Something was wrong. So that is why the check got returned. It was returned back to me. So now it's a similar transaction. It's a very simple transaction actually. So in the cash book, I have minused it, right? When I issued the check, I have minused it. In the passbook, it will get minused only when it is shown for payment and the banker accepts it. Banker has to accept it and give money. That time it is reduced in the passbook. But here the banker has not accepted the check. The banker has returned the check. He's given that check back. So that is why passbook has not gone down. Are you understanding this? So 1500 rupees ka check, I issued it. When I issued it, I minused in my cash book. But in the passbook, it does not get minus. Why doesn't it get minus in the passbook? Because the banker is giving the check back. He's returning the check. He's saying it's not proper. Take it back. So that is why in the passbook, it has not got reduced. Okay. In the cash book, it is reduced. So what I should do later in my accounting records, what should I do actually? I should increase this also. I have to match it. That written transaction has to be reversed. But I did not do it. No entry for return was made yet. So it's not yet made. So this is how we stand. The passbook balance is more. The cash book balance is less. I hope everyone is following. So the cash book balance is less. The passbook balance is more. Now my starting point is what? My starting point is passbook. So I will less. I will less this 1500. So can we combine and write over here only 8900? You can. But I generally like to do it separately because otherwise, here both were less. What if it is add, minus, and all, you'll be unnecessarily confused. So I advise you to do it separately. Out of the total cash and checks, sir, if you're finding any transaction difficult, just mark it or write and tell me to repeat after the whole question is done. I will repeat the transaction for you. Okay. No showing any hesitation over here. You did not understand something, you're supposed to ask it again. So it's a very silly doubt. I get embarrassed. That's fine. No one is going to judge you now. If you get less marks tomorrow, people are going to judge you. And no one is perfect. So if you have any questions, silly, big, small, whatever questions you have, solve it. One final time you are learning VRS from me. I'll not teach VRS again. In intermediate, we don't have VRS. So so you have any questions, any doubts, ask. Repeat ಮಾಡಬೇಕು ಅಂತ ಹೇಳಿದ್ರೆ repeat ಮಾಡಿಸಿ. So ಹೃದಯ ಅದಕ್ಕೆ. So please don't hesitate. Okay. At the end, but now we will finish the question. Out of the total cash, and you have to tell me like what is your context, why you're getting confused, right? You should tell me. I'll be able to explain better. Otherwise, I'll just keep repeating the same thing. So you'll just tell me, sir, this is where I'm getting confused. So that I can exactly address that point where you're getting confused, right? Why you're getting confused, if you tell me the reason, I can address that exact point. If you're assuming something else, I can tell you why your assumption is wrong. So that is a better way of clarifying your doubts. Okay, coming back to this. Out of the total cash and checks of 6,800 deposited in the bank on 24th March. So this includes cash and checks. See, cash gets cleared immediately. Okay, you put cash into the bank, immediately banker will put that money into your account. He'll also increase. You increase here, he also increases cash. Cash does not take time to get cleared because cash is note. You put, he will increase immediately. The moment you give him the cash, he will increase in the passbook also increases. But the problem is with the checks, because checks, you give him a check. If it is not that same bank's check, it will go for clearing. There is some process that will be followed. So it will take some time to get the checks cleared. But cash is not like that. Cash is not to be sent to anyone to clear it. Cash, you hakid kudlalli increase after the balance. But check is not like that. Check, if it is an interbank check, right? If it's a different bank's check, I'm Axis Bank, you give me ICICI Bank check, it will take some time to clear. Okay, so that is check, you have to be careful. So now let's read this again. Out of the total cash and checks of 6,800 deposited in the bank on 24th March, one check of 2,600 was cleared on 3rd April, and the other check of 500 was returned dishonored by the bank on 4th April. Now listen to this. The 6,800 is not causing any difference anywhere. 6,800 is not causing any difference anywhere. You can just ignore it. They have given out of those 6,800, what is causing a difference? They have explained it separately. So you just ignore the 6,800. Don't do plus minus anything. No, 6,800, you forget it. That it was given in the question and you forget it. It's not relevant for me. They have given the detail of what is happening, what is causing a difference is given after that comma, after 24th March, right? There's a comma. After that, they go on to say, oh, one check of 2,600 was cleared on 3rd April. That's causing a difference now. Because that 2,600 I had deposited, that am I increase in my cash book. But in the passbook, they have not cleared it up till 3rd April. So on 31st of March, this is how it is. The cash book has been increased because I deposited on 24th March. Immediately, I increased my cash book on 24th March. But in the passbook, the entry was not made up till 3rd April. So now this is 31st of March. So this is causing a difference. So now what should we do? 2600. It's like this. The starting point is passbook. So I will have to add. I will have to add. Add how much? 2600. And the other check of 500 was written dishonored by the bank. This is also similar. I have increased it in the cash book, 500 rupees, but it does not get increased in the passbook because the banker is saying he's rejecting the check. So he's dishonoring the check. So therefore, it is like this only. That dishonor will be recorded eventually in the cash book and this will be reduced. But as of now, we did not know it. On 4th April, it gets dishonored. So that is why we have not reversed this. It's not like this, it's like this. So now what should we do? The starting point is passbook. So I will have to add this 500 as well. So this 500 also. Can I combine and write this? Yes, you can. No problem. Bank charges. I hope everyone is clear with this. I hope everyone has followed this. Bank charges 35 and bank interest 2860 charged by the bank. So both are charged by the bank, appearing in the passbook are not recorded in the cash book. So bank charges, it is reduced in the passbook, not recorded in the cash book. So it's like this: passbook has gone down, cash book will entry Agnilla, entry in the cash book is not yet made. So now the bank charges. What should we do? What is the starting point? What is the starting point? The starting point is passbook. So I will have to add this. I will have to add 35. Same thing with bank interest also. It's charged by the bank. Passbook has gone down. So now we will have to add. So you can combine it and write, or you can write separately also. I'm following my method consistently. So I'm treating it separately. A check deposited in this another account. Important, interesting. Read this, please. Yes, Shreya. It makes a difference of 500. That's right. What's your question? I don't know. Understand. I hope you followed till here. Everything is right. No? Okay. Next. Where were we? A check of rupees, a check deposited in this another account of 1550 wrongly credited to this account by the bank. So I had deposited a check of 1550 in some other account of my in that bank. I have two bank accounts, let's say. You can have multiple accounts in the same bank, right? So I had two bank accounts in that account, in that particular bank. Two different accounts I had. So I had deposited a check in some other account, 1550 ka check. I deposited in some other account. But what did our stupid banker do? The banker has credited this account. So credited this account means what has he done? He has increased in the passbook. He has increased 1550. In my cash book, I did not do anything to this account. This account, I did not pass any entry because I did not increase the balance over here. I did not deposit any money over here. I deposited in some other account. I deposited that check in some other account. So in this account, I did not increase. But the banker has wrongly increased over here. He has wrongly credited. Credited means increased, right? So he's credited 1550 over here. This is how it is. Starting point is passbook. So now I will less 1550. A check of 800. Yes, it does make a difference because we had deposited the check on. I'm just answering a doubt of Shreya here. Sir, was cleared on 3rd April and the other check for 500 was returned dishonored by the bank on 4th April. So what that means is the banker has not given any effect in his passbook until 31st of March. So he sees the check and he dishonors it on 4th April. So till 31st March, no entry. If they had mentioned that it was credited in the passbook, I deposited the check and they credited it, that time, yes, it does not make a difference. You're right. But here they have not mentioned like that. They have said it was dishonored later. On 4th April itself, it was dishonored. So no entry was made in the passbook till 31st of March. You're right. There are two types of accounting. Sometimes the banker credits it. As soon as I deposit, the banker credits it, and tomorrow, if it gets dishonored, he reverses it. But in this case, it's not happening. They have not mentioned like that. I hope your question, I know what context that question is coming from. I hope you understood it. They have not mentioned that the check was credited in the passbook and then it was debited. The text is not like that. So therefore, it was not accounted for in the passbook at all till 4th April. 4th April also he is not accounting it. It's just dishonoring the check. Okay. Now coming back to this. A check of 800 drawn on this account. What do you mean by drawn? Drawn means what? Issue or deposit? What is drawn? Drawn means issued. Okay. Drawn on this account was wrongly debited in another account by the bank. So I had issued a check for this account. The banker did not write it here. He wrote it somewhere else. So now what has happened? I have issued for this account. So I have minus in my cash book over here. But the banker has not minused over here. Banker has kept it like this. He has minus some other account ka balance. So now the starting point is passbook. So I will less 800 rupees. See this one, a debit of 3,500 appearing in the bank statement for an unpaid check. This solves your doubt, Shreya. Pay attention. A debit of 3,500 appearing in the bank statement for an unpaid check returned for being out of date had been redated and deposited in the bank account again on 5th April 2020. So there are two types of accounting, okay? For the ones who did not understand Shreya's question earlier, Shreya's doubt, you will get that clarity over here. I'll go a little bit detailed to explain over here. So see this. The two types of dealing with the check deposited by the bank. From the bank's perspective, there are two methods. Normally, what the banker will do is, I deposit the check. The banker does not pass any entry in his books. He does not credit, he does not debit, he does not do anything. He waits for the check to be cleared and then he will increase in the passbook. So generally what happens? I increase in my cash book as soon as I deposit. Banker does not do anything. Banker will increase it only when it is cleared. That is the normal accounting procedure from the bank's perspective. Normally, accounting procedure is like that. When do they increase? Only when it is cleared. So it's dishonored. That means banker has done nothing. He does not do that point, that B point. Banker did not do anything. Banker kept it just like this. I increased that 500 in my books. Banker did not do anything. Banker just left it like that. Then it is dishonored. He kept it like that only. He did not touch my balance. He did not increase. He did not decrease at all. This is how the banker generally treats a check deposited. Is this clear? But there are some treatments. There are some banks which might not do it like this. Some banks might do it like this. Because see, check deposited dishonored is a criminal offense. Okay, you can go to jail. If a check that you have given and it gets tomorrow it gets dishonored, I can put you to jail for that offense. It's a criminal offense. So people are careful. People don't give checks just like this. People write the date, amount, and all clearly, or account only balance ಇರ್ತದೆ. ಸುಮ್ನೆ ಹೀಗೆ check ಕೊಡುದಿಲ್ಲ. Because tomorrow you will end up in jail if that gets dishonored. It's a criminal offense in our country. So that won't happen. So what the banker does is, The moment you deposit the check, the banker also increases. He does not even clear the check. Even before the check is cleared, you just went and gave him the check. He collected the check and he credited your account. But they generally write in the brackets, this is not withdrawable. You can't withdraw that money until the check gets cleared. This balance, right? You can't withdraw it until the check gets cleared. This is one more type of accounting. So what happens here? The moment you deposit it, the banker increases it in the passbook as well. This is, if they mention in the question only, then you have to assume that it is being done like this. So they increase it. Okay. And then tomorrow it gets dishonored. The check deposited gets dishonored. So that time the banker reduces it. He debits it. I hope you're following. That is when he reduces it. So it gets honored. No, 99.99% you said it gets honored. So they keep it like that only. So if it gets dishonored only, the banker will reduce the balance. You understood this? You understood the type of accounting here. Two types of accounting. The first one is what we did for the earlier question. That's normally done. And here, sometimes unusually, this also can be followed. So how do I get to know what has happened? See here. A debit of 3,500 appearing in the bank statement for an unpaid check. So I had deposited a check, but it is unpaid. So that's why they have debited. It was dishonored, returned dishonored, being out of date, and had been redated and deposited in the bank again on 5th April. So here I had deposited the check, I increased, the banker also had increased earlier, and then he dishonored it. That means he debited it, he reduced it, he returned the check. He said it is not written properly. Then on 5th April, again, I wrote that check and I gave it again. This is in the next month. It does not make a difference to me. Are you understanding this? Are you all following what I'm saying? So the second check won't make a difference. I redated, I gave that check again. No. What is happening with the original check? I had increased in both the books, it had gone up. But the banker debited it, the banker minused it. So this is where we stand now. I have not minused it yet over here. Okay. I do it on 5th April. I redate it, I send it again. That is all later. But for now, it stands like this. So it's like this. The banker has debited. And here in my books, it's still up only. Starting point of passbook, I will have to add 3,500. You can also just, sir, histala complication ang artha agudilla. Just look at the debit. It is debited in the passbook. That means it's minus in the passbook. It's minus in the passbook. So it's gone down. This is how it is. You just think like that. You don't have to go into the background. You just see that adjustment. It's debited in the passbook. Debit in the passbook means it's decreased, right? Debit in the passbook means decreased. So it's minus in the passbook. Done. That much only you think. Don't think more than that. Bank allowed interest on deposit 1,000. Bank is allowing interest on deposit. So this is increasing our balance, right? Increasing our balance 1,000. So starting point is passbook. So I'll have to minus this. A customer, again, an interesting point, important point. A customer who received a cash discount of 4% on his account of 1 lakh paid a check on 20th March 2020. The cashier erroneously entered the gross amount in the bank column of the cash book. Okay. Very simple. Customer who received a cash discount of 4% on his account of 1 lakh. So 1 lakh minus 4%. How much you would have paid? You would have paid 1 lakh minus 4% is how much? Yeah. 96,000. So he would have paid 96,000 rupees to me. Okay, 96,000 rupees he has made the payment. What did our cashier do here? Our cashier is stupid. What has he done? The cashier erroneously entered the wrong. Erroneously means what? Wrongly. He wrongly entered the gross amount. Gross means total amount. 1 lakh in the bank column of the cash book. So actually, how much has the customer paid? He has paid only 96,000 rupees. So 96,000 rupees has gone up in the passbook. But in the cash book, when our accountant wrote it, he wrote it how much? He wrote it as 1 lakh. He has written the whole amount, 1 lakh. So that 4,000 was extra debited in the cash book. It was unnecessarily increased in the cash book. We did not receive that much. We received only 96,000 in the passbook. But this guy has increased 1 lakh in the cash book. Starting point is passbook. We have to add 4,000. Find the answer. What is the total of the additions? 13,495. And what are the subtractions? 7,400. 12,250. What is the ultimate answer you get? $99,945. So we started with what balance? 99,945, right? Okay, we started with overdraft as per cash book. So it will be passbook overdraft. OD as per passbook. 995 or 945? Is there any error? No, right? Yes. This is our answer, right? We will break for lunch. We have adjusted cash book to be discussed. I will do it in the evening. And we will do 1 or 2 more chapters in the evening. If you have any doubts, you can ask. I will be available for another 10 minutes here. 10, 15 minutes. How much ever you want me to stay back, I will stay back. So any doubts, any questions, you can quickly ask. I hope there's no problem with the extension. Any questions, any doubts you have? Please ask. No questions, no doubts. I'm still online. I'm still here. I'm waiting. If there's any question, any doubts, anything you want, please do ask with regards to the chapters we've already discussed. Can we write narrations in simplified form for saving time? No. Narrations needs to be written explaining what you're doing. So I would not advise to write just to save time. Don't do that. Write it nicely, neatly, uh, and tell the audience or whoever is looking at it what you're doing. So as much detail as you write, it's better. Writing narration in real life is a art. Not everyone can do it nicely. So in the exams also you show off if you can do it, right? Show him that this is what I'm doing. This is the narration. How much ever detail you have, you can't write very nice narrations also because the details we get is very limited. Anything else? Do tell your friends also to join in for the evening sessions. If they have any doubts and all, they can ask and sort it out. I know there's this confusion. So 4 days for the exams, the class no diputkolbeka. It's not exactly class as you can see it. I'm helping you revise, right? We are doing some difficult stuff. We are doing some important stuff. So I'm helping you revise. It's not exactly a classroom. We're doing it together. That's all. So if there are any friends who are reluctant to join, just tell them they can join at least in the evenings. I wanted to keep it as much as doubt solving as possible, but you guys don't seem to have too many doubts. So we can continue with our discussions. But if there are any questions, you can come into the evening sessions. I want to keep it like that. And we can extend it longer than you want, right? It's revision, yeah. It's quick revision. Correct. So I am not getting any other doubt. We'll have our lunch and please revise whatever was done. And in the evening, tomorrow, other. And in the evening, I will be discussing depreciation and rectification of errors. So you can revise and come. If you have any specific doubts, you can ask me. Rectification of errors and depreciation accounting in the evening session. So what if my some transactions are wrong in BRS? See the valuation, I can't predict what they will do. Okay. There is no hard and fast rule, and even if it's there, they don't follow it. So it depends on the value. So as much as possible, do not commit any mistakes, silly mistakes specifically. Some transactions I can't interpret, the check and all, I'm not able to interpret properly. Write a note, uh, but generally, they have a standard of -2 marks. If your end answer is not right, -2 marks straight away, -2 or -3, they minus, and then per transaction, they'll give you some marks here and there. But again, that's not a promise. But step marking is there. You'll get something, but that's something we don't know how much it is. It depends on the transaction which you got wrong also, because there is transaction wise marks. When they get the answer key right, the institute puts in says if this transaction is wrong, if this transaction is right. They give very specific instructions to the valuer. So and also it depends on the valuer as well how we interpret. So depends on the transaction. But step marking you will get it. You will get some step marking, but there will be a substantial reduction of marks if your ultimate answer is not right. All right. I will stop the session. See you later.